Hello, hello. Thank you so much for joining us. My name is Dana Bowman. I am the managing partner of Key Condo here in Calgary, Alberta, and I'm also the host for this webinar that you're about to watch. So the webinar title is called Optimize Your Condominium, Invest Reserve Funds with Jordan Fraser, and Jordan is an investment advisor with Edward Jones. This webinar was filmed on September 18th, 2023. So before we get into things, I just want to say a huge thank you to everyone who has supported Key Condo. It's because of your support that we're able to host these videos and basically just provide actionable, tangible information for condo board members so that they can improve their condominium investment. I think that's one of the main reasons that condo boards exist, is to improve the investment on behalf of their unit owners. So your continued support is it's really appreciated. If you don't mind, please feel free to share this video with your network, and also please consider giving us Key Condo a 5-star Google review. Both of these things help raise our profile so that we can get in front of more condo board members and just continue to provide that top tier advice and service to condo board members and their owners. So with that, please enjoy the webinar. Thank you. Thank you so much, everyone, for joining us. Today we have Jordan Fraser with Edward Jones. Hi, Jordan. Thanks for joining us.
Hi, Dana. Nice to be here. Thanks for having me.
So first, I'm just going to introduce Jordan, and then Jordan is going to take it from there. So Jordan is an investment. Oh, sorry. Excuse me. I'll start again. An investment broker can assess your condo corporation's financial situation holistically and recommend safe investments such as GICs and high interest savings accounts that grow your reserve fund while guaranteeing funds will be available when they are needed. Jordan Fraser leverages his experience as a broker to ensure his condo board clients have access to the best performing investments available. He maintains a detailed knowledge of condo investment regulations and offers experience working with condo clients planning investments around major expenditures in reserve fund studies. Jordan is always happy to attend meetings or AGMs and make himself available as a resource for general financial advice and guidance for the corporation and individual owners. So that's kind of the introduction that you gave me, Jordan.
That's great. I wrote it.
And I think it's very accurate.
Yeah.
But before we kind of get into it, I just wanted to give my own introduction as well. I hope you don't mind. But I just wanted to talk about why I, as a condo manager, do vouch for you as an investment broker. So I've just found that a lot of investment brokers might have great proposals, but to me, what really matters is customer service. For condo investment, so because condos might change their authorized signers a couple times in a year, or they might want to meet with you at a 6 or 7 p.m. condo board meeting to get an update on their investments. I've just always found, Jordan, that you actually, you're really great at presenting with people, really great at explaining things in layman's terms so that people, they actually understand what it is that they're signing up for, and you follow through as well. So once you get the client, then I just have a lot of confidence that you're going to do a great job, for the next couple of years. So yeah, thanks so much, Jordan, for joining us today.
That's great. Well, thank you. I appreciate all those sentiments. I have to live up to them. So yeah, I mean, customer service is super important to me. That is something that I pride myself on. We're going to talk a lot about Edward Jones. I'm going to do a quick little intro of the company, and then we're going to talk a little bit more about the solutions and some of the ways that have been working with my condo board clients. But just to double back on something that you said, there's definitely organizations out there where you can't say no to a client. If you work in this organization, somebody wants to work with you, then you're obligated to accept that client. That's a little different from my business. I do get to choose who I work with. I like working with condo boards, and we'll get into kind of why that works for me later, but it's become a bit of a niche of mine. But why it's important about me getting to choose my clientele is because I can put a cap. I don't have to have 1,000 clients. When you have 1,000 clients, you can imagine how busy your day is trying to maintain them all and how well you're going to know their intrinsic needs, like really how deep you can understand them. So my cap is, I'm a long ways from my total cap right now. I'm still building my office and building my practice, but it will never get over 300 clients, which when you think about how many days you work in a year, it's pretty manageable. It's a pretty manageable amount. So that's how I'm able to deliver on some of the promises that I make, right? So Okay, so I did want to share with you, to start with, just kind of an introduction to an overview to Edward Jones. This particular presentation is probably geared a little more to the individual investor than the condo boards, but let's, I'll explain kind of how that all comes together at the end. So Edward Jones has been around. We had our 100-year anniversary last year. It was founded by Ted Jones, Edward Jones himself, back in 1992 in the St. Louis area. And he basically built the company focusing on rural markets, but moved into cities, obviously, not too long after that. Our North American presence, we've got head office in Mississauga, Ontario. That's our Canadian head office for our Canadian operations. And our head office for North America is in St. Louis, Missouri. We have more than 50,000 associates. It's a pretty big company. We have 7 million investors with over 1.8 trillion in assets. Okay, that's the 16th largest asset manager on the planet. We're bigger than all the Canadian banks combined. So Royal Bank would be the biggest Canadian bank, and they're 34th or 36th. I'd have to check somewhere in that range as far as being asset managers in Canada from one of the banks. But why that matters, we'll get into like how that changes what the offerings that we offer our clients, and kind of how we can throw our weight around a little bit when it comes to the investments themselves. Edward Jones today in Canada, we've got 1,800 associates. That's 650 branch offices with more than 850 advisors. And almost 250,000 clients. So our distribution, we've got 90 offices in Alberta. I deal with clients in BC. That's where I'm licensed. I can easily become licensed in other areas when opportunities arise, but I'm focusing right now on Alberta and British Columbia. That's where my connections tend to be. In the States, we've got offices all over the place. Obviously, there's a lot more people in the States, so you end up with some of these, 770 offices in California and stuff. You start to see some big numbers like that. We are pretty well decorated. We've got a 5-star brokerage award. That's the highest ranking brokerage award in the 2022 Wealth Management Advisors Survey. We've just gotten off celebrating JD Power #1 in Investor Satisfaction Award for 2023. That's our 6th or 7th time winning that award. Not contiguous. There was one gap year where we didn't win the award, and we came back to take it again. The Concentric 2021 Best Employers in Canada Award. It's a great place to work. So what makes us unique is our commitment to long-term investors, and reserve funds definitely would qualify as that. We have offices in convenient locations, so I'm throughout, we've got offices throughout the city. Obviously, Calgary is pretty well served, and we've got face-to-face relationships with our clients. We also have a partnership structure. We are not publicly owned. We do not make decisions for our shareholders. We are the shareholders. Okay, those of us who work here become partners in the firm, and that's how we're governed. So we have a lot of input in how our clients get served. So our purpose is to help clients with their long-term financial objectives. So for individuals, obviously, that's your main big one, would probably be preparing for retirement. It could be living in retirement, which can be 20, 25, or even more longer these days, paying for kids' education, preparing for unexpected events, and planning, estate planning, wealth transfer, inheritance, those types of things. Reserve funds is not specifically mentioned here. Like I said, that's my niche. So what we do today is we figure out, where are we? Where do we need to be? How do we get there? Is it possible to get there? And then we keep that on track. And that's where all the real work is that kind of constantly checking back, making sure that we're on track, resetting to those objectives. When we're talking about investments themselves, we buy high quality investments. We plan to hold them for the long term, so we're not doing day trading or highly speculative stuff. And we get safety through diversification. And we'll talk about how diversification affects condo boards. There's a whole bunch of different things that we offer, from insurance protection right through all the different types of investments that you could possibly ask for. Many of those are available to the condo board clients. They might not all be of interest to that risk profile and those goals, but we are basically a full stack, full service provider. If there's a product out there, we can get it. We do cash management services, high interest savings accounts, premium interest accounts, anything you could ask for. And it's a team approach. So I'm the financial advisor. That's the role that I play, that one on the top. We've got our home office associates who are doing things behind the scenes to make sure I have everything I need in order to serve you guys. We've got a branch office administrator who works directly in my branch with me and my clients, and they're a partner in my firm, and they help they'll help all my clients directly. They can take appointments, they can get information through to me. If I'm on vacation, they're going to be here for you so that business can still be done. And then we partner with legal and tax professionals as well as necessary. So I'm willing to speak with those professionals as well as part of the service team. Okay. Normally I would take some questions and answers, but this is the part where we're going to get a little bit more into the specifics about how I work with the condo boards themselves and the reserve funds.
I'm sure that Edward Jones would be incredibly happy with how you presented all that information, and I'm really happy to work with you guys. So you asked me some questions, or you provide me some questions beforehand, just to kind of like break things up a little bit and make the information a little bit more digestible, which I think is great. So excuse me while I squint in my old age, but I'll ask the first question. So we have heard all about the rising interest rates. How does this impact condo reserve funds or the investments they choose?
Right. So when I'm looking at a reserve fund, they usually have some projections there. They're going to project future expenditures, right? Where do we need to spend money and when? They're going to project saves. How much money are we putting away? And they're going to project some growth on that, right? Because they're going to, like, at least the goal is to keep pace with inflation. The last thing we want to do is stick 100 grand away, then go to use it in 5 years and find that its buying power has eroded, right? So when I'm looking at reserve funds, usually that number that they're using as a projection for growth is somewhere around 2.25%, maybe 2.5%. And for the last 15 years, frankly, in very safe or guaranteed investments, we haven't always been able to get that return, which is tough when you're trying to keep pace with inflation. Obviously, inflation is a big thing right now. We're all talking about inflation. We're obviously trying to control it. It's not really what we're here to talk about, but the interest rates right now, when it comes to buying fixed income or safe investments, those have gone up too. Those go in line with the interest rates. So just the same way that it's causing us all this pain on our mortgages, it is helping investors. So right now, there's lots of options for guaranteed investments and low risk investments that are giving returns over 5% right now. So historically, that's considerably over the rate of inflation. So this is a really great time to be investing in safe investments, right? There's actually returns to be had there. So that's how it's kind of affecting people that have, low risk tolerances and needs that way. We can significantly exceed what we need to so that your money's not eroding on an annual basis at the moment.
That's great, Jordan. So I feel like that is a great segue into the next question. How risky are GICs? So the question, actually, I'll read it out, is what exactly is a GIC and what are the advantages and disadvantages?
Yeah, so a GIC is a guaranteed investment certificate. Okay, that's a deal you make at the bank where you say in exchange for X amount of dollars, the bank is going to give you X amount of return. And there's also a term involved. So I'm going to give you $100,000 for 1 year, or 2 years, or 3 years. And in exchange for that guarantee that I'm going to lend it to, you're going to guarantee me a rate of return. At the end of that term, the money comes back and is redeemed in full with that return on top. So that's where you get that guaranteed return. So why we like those is because Canadian banks are pretty reliable and consistent. So those returns are pretty safe. You're basically taking very little risk. The only thing we really look for then, basically the Canadian banks are supported by our Canadian government. There's an organization called the Canadian Deposit Insurance Corporation. And all of us institutions pay into this corporation. And what that does is it protects your deposits. So if any of these banks were to do something crazy or get themselves in trouble and become insolvent, each account would be guaranteed up to $100,000. Okay. So one of the things that we'll talk about with being a broker is that we can spread the money around to many different banks so that your money is always 100% covered, right? Canadian banks, like I said, they're super stable. It's not something that keeps me up at night worrying about. But if it's a matter of me clicking this button or this button, and one way we're 100% insured and the other way we're not, we're just going to choose the insurance. We're going to choose to break up our deposits into $100,000 increments and remain fully protected by bank, the guaranteed contracts that we're writing, and the Canadian Deposit Insurance Corporation.
Amazing. Thanks so much, Jordan. I actually have a couple of questions just based off of what you just presented, but I'm just going to keep going with your prepared questions first, and then we'll just have your questions at the end, if that's okay. So the next question is, you mentioned that you're a broker. So what are the advantages and disadvantages? What are the advantages and disadvantages of working with a broker?
Right. So that's, if anyone's worked with a mortgage broker or an insurance broker, it's the same basic thing. I'm not beholden by any institution or any product. Okay. I'm never told you got to sell an Edward Jones product. It's not a thing we do here. So what I'm able to do is take my clients and make sure whatever's on the market, we just choose the best. That's what we're always going to pick. So it's the benefit of choice. So to double this back kind of to our GIC discussion, this is an example I just put on the screen here of the interface that I use when I'm choosing a GIC. So the first thing that I did on this one, and this isn't a live version of it, so I can't work with this one, but the first thing that I do is that I selected 1 year and I said, sort by the best 1 year GIC rate. Okay, now it's important to note these are subject to change, like literally by the minute. But this was pulled, 20 minutes ago. We could go to Innovation Federal Credit Union and get a 5.6% rate on a 1 year GIC. Okay, so if that's the best on the market, and it is by a marginal amount, we have access to that. Okay, you'll notice that some of the big national banks are actually way lower down the list. The credit unions tend to be a little bit more aggressive in raising money because they have to be, right? Royal Bank doesn't have as much trouble getting their hands on capital. So you'll see that the credit unions do offer a little bit better return. So like I said, we will structure this as a broker. We can structure so that we have 100,000 at Innovation Federal Credit. We can have 100,000 at Haventree Bank, 100,000 at Versa Bank. We just go down that list and take advantage of all the best GIC rates on the market, right? And it might be a different company that's got the best 2 year rate or the best 3 year rate, but this interface, that's unique to broker.
That is awesome. So I'll just add here too that one of the benefits I think of working with a broker versus me working with a bank, because I would say a lot of condo board members are like, well, CWB is a CWB or ETB or whatever has like this great rate. Like, why don't we just invest with them? Like, why would we go through a broker? And like, just as an example, like maybe right now when we want to invest the money, I mean, maybe Versa Bank, which is one of the companies that you work with, is the best option. But once that GIC expires and we need to reinvest the money, maybe Royal Bank will be the best option. So like if the condo corporation invests all the money through Edward Jones, sorry if I'm not using the exact right terminology, then like when the GICs expire, then like you can just move the money. Whereas like if we invested directly with the bank, then we would have to like do all that administration. And I think it is quite a bit. It's actually more than what most people would assume. So yeah. that's another benefit, I think. And you probably already touched.
Yeah, it's just always the best, right? And that's the thing, right? Yeah, like you're right. As they're expiring, because you're right. Today it's Innovation Federal Credit Union. Like tomorrow it's going to be somebody else. So every day you just know you're going to get the best rate on the market, right? So yeah, that's a big advantage. Sometimes the Royal Bank will offer us better rates than they offer their own clients, and that's because they know they're on this competitive marketplace, right? So I can't say that's always the case or guarantee that's always the case, but often what you'll see is that they know if they're going to get a dime off of Edward Jones and GICs, they're going to have to offer a more competitive rate because they're competing against all those other banks. With their own clients, they've kind of got a captive audience. And you'd be surprised how many people always deal at the bank. Whatever bank they're at, that's the one their parents set them up when they were a kid. That's where they deal. Like today, that's a common thing. So.
Yeah, exactly. No, for sure. Okay, so that just triggered another question for me. But again, I'm just going to leave it until the end because like your questions are amazing. So your next question out, and this is the 4th out of 6 questions. So what kind of alternative investments can condo boards consider?
Right. So we're just talking about regulations. Condo boards are allowed to invest up to 30% of their wealth in securities. Now, what's a security? That's a long conversation, but let's just talk about some of the titles. That would be like things like bonds. That would be things like preferred shares. That's even things like shares themselves, right? And you're thinking, well, God, what are we doing with reserve funds in the stock market, right? And right now with these returns, that probably doesn't make sense. That's probably not a discussion we're going to spend a lot of time on. But if we were to go back 5 years when, the interest rate on a GIC was like less than 1%, right? Maybe all of a sudden a preferred share or a bond that pays significantly higher, right? Like currently you can get common shares that have, I don't want to quote exact percentages, but considerably more than even a GIC rate. And when you look at things like insurance companies and banks, you can buy those stocks and you get a fixed return just from owning them, right? A dividend. And those dividends can be sufficient for the needs of the condo board's growth. And then over time, if you hold that investment a long time, and it's a good idea to do so if we're buying the right ones, you can also, if we look at a large enough time, you can get appreciation there as well. So you can get 2 sources of income, right? It's never something, we're never going to put a big chunk of money in any investment. And we're never going to hold more than 5% of a fund in any one company. So even though we like banks, let's say we like banks, Canadian banks are good banks. We want to buy TD Bank because it pays a nice dividend. We're never going to put more than 5% of reserve fund in one investment, right? Just for diversification and for safety. But these are options, especially things like bonds, that if this ever starts eroding where interest rates start coming down, and for a lot of reasons we hope they will one day, then we have those options to bring to bear so that we can, retain some kind of yield on it. We can still get clients, good yields through these other investments. So I'm not ever saying that they will be recommended, but it's nice if you're dealing with a broker, or you're dealing with somebody that's IROC licensed to sell all these investments, we can have those discussions, right? It's something that if the environment were to exist where we need them, we have them.
That's awesome. And you keep an eye on when maybe we should be looking at switching from GICs to maybe mutual or not.
Yeah. Bonds are more common because, like, if we go up the risk ladder, like GICs are low risk. There's some bonds that are considered no risk, believe that or not. They're not the ones that pay the best, of course. The more risk you take, the more money you can earn, right? So, and we're never going to take big risks with condo boards. I shouldn't say never, but primarily all of this is very individual. But I haven't seen it where we want to take big risks. But bonds are pretty safe. That's a pretty safe debt instrument, and you can buy bonds like from the federal government. Like you can buy Bank of Canada bonds. Those are considered secure because the Bank of Canada could just print money if they ran out of it. So they're considered very safe, right? So that's a no risk investment as well. And then there's, then you get to the provincial bonds and corporate bonds and things like that. And we'll only do investment grade bonds. So we're not looking to invest in risky companies, but bonds, even just a few months ago, were still part of the discussion, and they might be back before too much longer. They do offer a little bit, in some cases, additional yield over what the GICs are offering right now. But yeah, that's very situational. But, GICs are attractive at the moment.
GICs are where it's at right now for sure. Awesome. Okay, so how do you get paid, Jordan? Are there any fees for managing reserve funds?
Yeah.
And are there any kickbacks?
No, there's none. No. So this is the thing. And this is an important question, right? Because people are like, well, that all sounds lovely, but like, that's got to cost, right? And like, you think, man, I got a guy that's dedicated to my account. He's going to read my reserve fund studies. He's going to come to my meetings. We've got this marketplace. Like, how does that all work? Frankly, it's the same way your bank gets paid when they sell you a GIC, right? There's a little bit of a trail that's paid by the bank for us making that connection. And it's that simple. There's nothing more to it. If we start buying stocks, those would have a commission attached. It depends on the account we set up, but primarily what we're going to have our reserve fund clients in is called a traditional brokerage account. The account itself costs nothing. There's no regular, ongoing, or yearly or annual fees. There's no transaction fees for most of the stuff we're going to do. If we start talking about securities and those types of things, then there would be a commission. But we discussed that. The commission is not enormous. Obviously, I'd have to make a case that it's worth it, but that's how we would get paid. On GICs, it's basically built in. There's no additional costs at all to working with an Edward Jones advisor. Okay.
And is the rate of return lower because like you are making that commission from the bank? Or no. Yeah,
you get, when it says, I showed an example of a 5.6%, you get every penny of that. It's not reduced or deducted, and it's not a lower rate than somebody would get otherwise, right? We do have fee-based accounts where that allows us to like not attach commissions to bonds and things like that, but then in exchange, you're paying a fee. For the way that we invest with condo funds, like that's actually, there's a lot of reasons why an individual investor would want to be in that type of account. For condo reserve funds, that I can't see that ever making sense.
Okay, so basically, condo corporations, they can invest money and they are going to make the same return as they would if they invested directly with the bank, but they're obviously just going to get better service. So no
additional cost. And like I said, I mean, I'm doing something wrong if I'm not, the fact that I have 20 banks, right? Like I should be able to do at least what your bank can do, if not better, every single time.
Agreed. Last prepared question. So how do you help your clients make sure that they are making good choices with their reserve funds?
Yeah, it's through taking the time to read them, right? So probably the thing that doesn't get discussed enough, because we're all so happy with GICs right now, we forget that what we're exchanging is that we're locking the money up, right? So it's pretty attractive right now to be like, man, lock it into a 5-year GIC or something just to preserve these rates, right? The banks, everybody acknowledges that the rates will come down from where they are today, right? In the long run, right? So whether they go up a little notch before they come down, I don't know, like that's to be determined. But they're at very high rates right now, and it's restrictive to the economy, and they're going to bring them down. So one school of thought would be just lock it all up, but we have to worry. The biggest concern for condo boards is liquidity requirements. So we need to make sure that the terms we're choosing allow them to expire and the money, the liquid cash, to be available when it's needed for those expenditures. And we will put things into short-term investments like high interest savings accounts, money market like products, for short term, so that, you know, as those bills are being paid, as we're paving the parking lot, as we're building a new fence, those expenses can come out and the money's not locked away, right? So that's the big consideration, is making sure that any decisions we're making today meet our needs, you know, 1, 2, 3, 4, even 5 years down the road.
That's awesome. And then one thing I've started doing with all of my condos recently too is that, like with most condos, I think like they have an automatic, like they automatically will send contributions, monthly contributions from the operating to the reserve fund, and then they end up sending like a bulk amount to you, like maybe once a year or something. So what I started doing is just like asking Edward Jones just to take the money automatically every month into that high interest savings account. So I mean, is that easy for you to set up? Like, should everyone do it?
One more piece of paper with one more autograph. Yeah, it's super, super easy to set up. And the advantage would be that every month that we could have that drip directly into like a high interest savings, so that it's immediately making you something. And like I said, right, like high interest savings right now, those are also really good yielding. Now that's a floating interest rate. So we just get what we get. Right now it's great. So why wouldn't you have that money working for you, you know, every 30 days, right? Like as it comes out, you'll drive more performance that way. And then it's just less work to do when you're having to get everybody together to sign and have a check transferred into the financial institution. You can just already be there. And then when it piles up to a certain, you know, amount that we agree on, that we don't need, right, then we can do a bigger investment with it.
Agreed. Okay. So I curated a couple of questions just based off my conversations that I've had with, like, I don't know, all the condo boards I've ever worked with. And yeah, so the first question, that it seems like I get this every single time I ever talk to a condo about investing in reserve funds, but can you withdraw GICs before they expire if they needed it?
You'd have to exhibit some pretty serious financial need. The banks will fight you on it. I mean, you made an agreement. It's basically a contract that we're going to give them the money for a year. If they decide like, let's say something happens, like, I don't know, one of the buildings burns down or some major catastrophic. I know you have insurance, but like, let's say that there's some immediate needs for liquidity, right? You can make a good case. They'll break it, but they're going to keep all of the accrued interest, right? But yeah, it's not easy, frankly. So normally when somebody's breaking a GIC, it's usually a person, right? That's most of the investment. Like, and people would have to make a case that they're in some kind of financial hardship, at which case they will normally let you out of it. But here's the thing: they don't have to. They don't have to say yes. So we're kind of, it's a case by case thing, right? So yeah, it can happen, but it's, you know, proper planning should help avoid that. You know, again, shy of something catastrophic.
No, for sure. And like that makes sense that, I mean, that they're not going to provide you any interest off of the GIC if you break it early, because I mean, you are breaking the contract, and it makes sense that they don't want to break it early. I guess like I guess with condos, like they're usually just so conservative. So they just want to know, like, did I make a mistake? If we did, like, would we be able to get the money back? And so like you're saying, yeah, I mean, it's probably case by case basis, obviously, but it's not impossible.
So proper planning would include, like, regardless of what the reserve fund study says, like, let's say we look at a reserve fund as brand new condo, right? Everything's brand new, shiny and new. And we're like, we don't need any money for 5 years. And it's like, okay, well, let's lock it all up then. That we wouldn't do that, because that doesn't allow for, like, 5 years, luck can happen, right? We just don't know. Like, so what we would build is a ladder. It's called the GIC ladder, right? Some shorter term, some longer term. Even though we don't require the shorter term, and it might seem to make sense to just lock in these rates, we would have some money turning over, and hopefully that would meet any of those needs, right? We'd always have something, right? And that would be, I would suggest, usually something significant. So we'd never be more than a year away from having some liquidity event where we have fresh money. Every year we get to look at, like, did something change? Do we need this now? Or can it be locked up again? You know, even if that's for 1 year or 3 years or whatever, right? Like, we'll have those discussions annually. So that hopefully will avoid having to cash in stuff early.
Absolutely. Okay, that makes sense. So next question is, like, do you help make sure that all the funds are going to be insured by CDIC, I think it's called?
Yeah, it's part of the job. Yeah. Every time we're choosing a new one, we have to kind of look at what do we hold, what's available, and then we pick the best option that'll allow us to have that insurance.
Could you just quickly explain what CDIC is?
Yeah, Canadian Deposit Insurance Corporation. So all of us in this industry will pay a little bit of money for what we have on deposit to this organization. It's insurance, right? And that insurance, it's basically run by the federal government. If a bank were to become insolvent, so we've seen this in the States, we really don't see this in Canada. There's reasons I won't bore you with, but Canada's got different banking regulations that really makes our banks a lot more stable. It's called liquidity ratios. Banks have to be what's the word, like financed in order to, so we all know that banks, when you put your money into them, they're going to lend that money, the money that's just sitting in the bank. So there's always some level of risk that if everyone were to take their money out on one day, the bank would go insolvent. They wouldn't be able to meet all their obligations, right? So that's the insurance that protects you from that ever occurring, right? Now you think, well, Royal Bank, that would never happen. Yeah, well, I mean, it shouldn't. You're right. Like I'm fully on board with that, but we probably don't want to put all our money in that one bank anyway. So if we're spreading it around and we've got some credit unions and stuff that are regional and stuff, it's nice to have that coverage. Like for me, it's a matter of checking one box instead of another, right? A lot of the time it's exactly the same interest rate or within 0.1%, right? So
another reason why
yeah,
like it might not be the best option to go directly with the bank, because then they're not necessarily going to be watching to make sure that all the funds are going to be insured.
Yeah, they won't. It'll just be like if you're with one of the big banks, all of your GICs will be at that bank, and they'll only $100,000 be insured. So you could have 2 million and only 100,000 will be insured.
So a question that's probably not actually technically within your scope, but let's say a condo corporation has, I don't know, it's a newer condo corp. So let's say they have like $200,000 sitting in their reserve fund and they haven't yet invested it. Is that money insured right now? Like if it's with like one of the big banks?
$100,000 will be insured.
Yeah, so that other 100,000 isn't. But that said, most condos are not with like, I mean, actually some condos are with credit unions. So anyway, it is something to keep in mind for sure.
I feel pretty good about Canadian banks. Like this is not fear mongering. It's just, it literally doesn't make sense when you have these kind of options, right? It just doesn't make sense to do it any other way, right? That's
for sure
a free thing that we can do with a stroke of a key, right? Like, like you saw, like I have all those little radio buttons. I just click one instead of the other one, right? Like it's very simple. So yeah, why wouldn't we?
For sure. I guess like where I'm coming from is that like usually when I'm having these conversations with condo boards, like there's maybe like 5 different board members, 7 of them. And like usually there's going to be one very like conservative person who's like, you know what, we really need to think about this before we move forward. But one thing I talk to my condo boards about is that sometimes like inaction, it can actually be more dangerous than action. So like, I mean, just keeping all of your money in one big pile maybe feels like the safe choice, but maybe it's not.
Yeah, so like we're a trust account. So like when you put money on deposit with us, we don't lend that money. So it's a little different. And then depending on the like when we put it in the GICs, it's covered by that CDIC insurance. Our investment accounts for other securities are covered up to, that's a different thing. That's Canadian Investors Protection Fund. And the investors get different investment protection. So it depends on the type of security. Basically anything other than a GIC would be covered by that Investors Protection Fund, and that's up to $1 million. So that's a much larger protection amount. So if we ever had an account where some of it was in GICs and we spread that all around, so it's covered, and then we did have some bonds or some stocks or something like that in that account, those would be covered too. Again, we're a 100-year-old company. We manage a lot of assets and we don't lend our clients money. So like insolvency's not been a concern for Edward Jones for a long, long, long time, but it's nice to know that all those protections are in place. That's government programs for those.
Absolutely. Thanks for giving us all that confidence, Jordan. Yeah. One more question, and then maybe I'll just let you, I think that's all the questions that we've had so far. So maybe I'll just let you close it out after this one. But so from an administrative point of view, how liquid is the money once we send it to Edward Jones? And like say we, again, like I just have this question, it feels like every time that condo boards are discussing investing their reserve funds, like if they ask for it tomorrow and it's in a high interest savings account, administratively, how easy is that and what's the timeline?
It's keystrokes. I just need verbal. Once it's a person that I've authenticated, right? Somebody that I know has the authority to give that information. Hi, I need $80,000. I need it ASAP. Typically 3 business days would be fair, possibly 4, depending on what time of the day it is. Okay. And the reason is high interest savings, we have to deregister the money from high interest savings. That usually will take like we call it trade day +2, but it depends. Like if it's too late in the day, that trade day actually becomes tomorrow. Does that make sense? So yeah, like 4 days, and then we EFT transfer it to a bank account, and that's very, very quick. So again, like the systems, like we send it immediately, and it goes through basically instantly, whether it's reflected in the online banking system like immediately or not. It's there. It is there for you. You can spend it.
Awesome. Okay. And actually, sorry, I have one more question. So the way that I manage my condo corporations is that I want my condo board members, like at least authorized signers, to have a relationship directly with the investment group. But I know that not all condo management companies operate that way. Like some condo management companies, they want you to communicate with the condo manager directly instead. So like which one do you think is probably better for the condo corporation? And maybe can you talk as well about like how much of a burden it is maybe to be an authorized signer and to communicate with you directly? Because I personally don't think it's much of a burden. It's
Yeah,
maybe a couple emails a year, but
it's not. And to be fair, I guess I have some thoughts and feelings on this. When we set accounts up, we kind of be like, okay, here's how we're going to work together. I do have one condo company I work with where the manager is on all the boards. And so he's a signatory. So he brings the resolutions back and he's allowed to sign for all those transactions. He can make all the decisions. Okay. Which is, it's fine. And that's continuity. I mean, the idea is he's probably going to work there a long time. So it does provide some continuity from a signatory standpoint, because the rest are going to turn over as the board moves. But most of the time it's a board, and so I try to ask for like a point person, because I don't want to have three people calling me maybe for the same thing or for differing things, right? So have your meetings, make your decisions. Usually it's the treasurer, but it doesn't have to be. That works directly with me as long as I know who it is. And that also allows me to build a bit of a closer relationship with that same person, with that person. I'm reachable, I can set people up so they can reach me through a secure text service. It's not my own cell phone, but through our secure messaging system. And that comes to my desk and it comes to my phone. I can get all that information, email, obviously phone calls, myself, my administrator, we're always available for transactions. So, but yeah, it's best to have kind of a point person, but there'll usually be at least 3 signatories at every board.
yeah, because most condo corporations are going to have like two to sign. So like two board members will need to be able to sign for money to be moved, and then usually they're going to have the three authorized signers. Maybe the whole board is an authorized signer kind of thing. And then I would say like in terms of again like that burden of like having to actually spend time talking to you. I mean, once we set up the account, which is a little bit of back and forth, but it's not a lot. Really the only times that we talk to you is when the authorized signers change. So like maybe after the AGM, like we have to update you that the directors have changed or the authorized signers have changed. And then maybe once a year, like once we do our reserve fund budgeting for the year, like we just let you know what's changed, and then you can modify the investment strategy from there. And that's really it.
That's it. That's perfect summary. That's it. Yeah. So yeah, there's usually a form to do every year. Obviously, I have to, for anti-money laundering and stuff, we can't just like put a name in and you just be like, oh, Bob, like, hi, how are you? Like, I do need to make sure this is a real living, breathing person and we know who they are, and I've checked their ID and all that kind of stuff. They're not using the condo board to funnel money to terrorists or anything like that. So yeah, I have a little bit of responsibility, but it's pretty straightforward. That's one form usually a year that we just have to update.
Yeah, you make it really easy. So yeah, I mean, that's pretty much it, Jordan. Anything else you want to say to wrap everything up here?
No, I think we covered it. Yeah, yeah. Yeah, I don't know how to summarize it anymore. We've covered a lot of ground. So like I said, it's a good time to be doing safe investments, but you just want to be at a place that kind of understands. I think the biggest risk right now is liquidity. I think that's the thing to keep an eye on, right? Because it's so easy for someone at the bank to think, or it's anybody, I don't need to pick on banks, like it's just anybody to think they're doing you a favor by locking into some fantastic rate. But the risk is like, what if something happens? And is the plan, like, is locking everything up for 5 years appropriate? Probably not, but like, the reserve fund will help inform that. So it's just making sure. That's probably the biggest thing that I spend my time on with condo funds, is making sure we've met the liquidity requirements, not just for this year, but for the next 5 years.
Awesome. Okay. Yeah, I think you did a great job of summarizing everything. So yeah, I guess I'll just close it up here. Thank you so much, Jordan, for joining us. Edward Jones is definitely, I've just been so happy with you guys, and I absolutely recommend anyone any condo corporations that are looking to invest their reserve funds to at least interview you and give you a chance.
Thank you. I appreciate that.